taking a look at Chapter 8, Section 1. Our learning objective for today is to journalize and post closing entries for a service business organized as a sole proprietorship. So what we need to know in order to do our closing entries is we have to understand what are permanent and temporary accounts. So accounts that we use to keep information from one fiscal period to the next are considered permanent accounts. Permanent accounts can also be called real accounts. So what is a permanent account? Well, let's think about this from the perspective of a customer. So let's say that we have accounts receivable for Grassel. He comes in on December 30th and buys something on an account from us. So he will then have a debit balance because he's an asset account, accounts receivable for Grassel. December 31st is the end of the fiscal period. I still need to know going forward into the next fiscal period that Forest Grassel owes us money. So my accounts receivable accounts are going to be considered permanent accounts. My assets, my liabilities, and my owner's equity are going to be considered permanent accounts because I need them and I need that information from one fiscal period to the next. Accounts that we use to accumulate information until it is transferred to our owner's capital accounts are going to be considered temporary accounts, also referred to as nominal. So what would be a nominal or temporary account? Let's say I go through for my fiscal period and I keep track of all of my advertising. So I go through and buy an ad in the paper, I sponsor a sports team, and all of that goes into my expense account for advertising. Expenses have a debit and a balance, so that goes up. Now, at the end of one fiscal period, I no longer need to keep track of what is in my advertising expense because it doesn't make sense if my business has been going on for 15 years that the balance of advertising expense would be $276,000. That has no bearing on me. What I need to know is what is my advertising expense for this fiscal period for whether or not I am making money or losing money and determining my net income. So all of my temporary accounts are going to be your revenue and your expense accounts. Also, when you look on your worksheet, that is going to be the accounts that are going to be on your income statement. But we do need to include our drawing on there because our drawing account is also a temporary account because our drawing account is a contra account to our owner's equity account. So what we need to do is we have to do our closing entries. And those are used to prepare our temporary accounts for our new fiscal period. And temporary account balances must be reduced to a zero at the end of each fiscal period. So in order to do that, we have to go through and take a look at whether or not we have a net income or we have a net loss. So when we have a net income, basically our income summary account has a credit balance which is shown going to be in this T account. Okay, so what would happen is income summary is a temporary account that I use to close information into. So my debit is going to be in my expenses, my credit is going to be my revenue. Because I have an example of a net income, my credit is going to be larger. If I have a net loss, that is going to be the bottom T account where we'll go through and my expenses are going to be greater. And then my credit would be smaller because I would have a debit and a balance. This is important for you to know because we have to close our income summary account into our owner's account because the whole reason anybody goes into business is to make money. This is the step where how much that profit or loss goes into our owner's equity account. So if we have an income summary creditor balance, we have to get that to zero, so we would debit income summary and we would credit our capital. If we have a net loss, as shown on the bottom here, that means I need to get income summary to zero, so I'd have to credit it, and then I would debit my owner's equity account. Let's take a look at how this will look. So we're going to take a look at my first closing entry is going to be to close my revenue account. And so basically, when I look here at my income statement column, I can see that sales has a credit balance of $5,820. So I need to get sales to zero. So what I need to do is I need to debit sales $5,820 because that would get me to zero. I can't have a debit without a credit, so I have to close it into something, and that something I'm closing it into is going to be considered my income summary account, and again, just as a temporary account. So then I will go through and repeat that again on my income statement column for my worksheet with all of my expenses. All of these have a debit balance. I need to get them to zero. Insurance expense right here has a debit of $150. I need to get insurance expense to zero. So right here I'm going to credit $150. So what I do is directly below my closing entry for my revenue account, I close my expenses. But I need to credit my expenses, and I'm going to debit income summary. I don't know this amount until I have all of these listed and I add them up. So when I go through and the work together, you'll see how I determine that. Now, my third account that I'm going to be closing is going to be closing income summary. Now, the balance of income summary is always going to be what is my net income or net loss listed on my worksheet. So we can see right here, my worksheet says that I have a net income of $3,162. Whoop, whoop, that is good. My business made money. So if I have a net income, that means the value of the business is going up by $3,162. So who gets that money? The owner. And the owner of this business is Michael Delgado Capital. So Michael Delgado Capital right here is being credited $3,162. I'm going to debit income summary $3,162. When I do that, that gets income summary to a zero balance as well, which is a goal because income summary is a temporary or nominal account as well. My last closing entry, because we have 4 of them, is to close my drawing account. Drawing is a contra account to capital. So we can see right here on my balance sheet column of my worksheet, Michael Delgado Drawing has a debit balance of $1,150. I need to get it to zero. So I have to credit drawing $1,150. That means I am going to debit capital $1,150 as well. Drawing gets a zero balance. Capital goes down by the amount that the owner withdrew from the business. So taking a look, we have a couple questions here I want you to ponder. So here's the first one. What do the ending balances of permanent accounts for one fiscal period represent at the beginning of the next fiscal period? So permanent accounts. Cash is a permanent account. Accounts receivable for Grasso. Mrs. Grasso Capital. Those are our permanent accounts. If I had accounts payable, Don's Quality Market, that is also a permanent account. So what does it represent at the beginning of the next fiscal period? Their beginning balances. All so far in accounting, when we've gone through and looked at our balances, like when our business first starts, every account has a zero balance. But when your business continues on from one fiscal period to the next, whatever is at the end of one period is going to be the beginning balance for the next fiscal period. So, what do the balances of temporary accounts show? Changes in the owner's capital account for a single fiscal period. So all of our temporary accounts are going to be the accounts that we use to determine whether or not we've made money or lost money. So that is why we can go through and say it is what is affecting our owner's capital account. What are our 4 closing entries? Now, I like to think of these as an acronym, okay? So I like to think of the first one as R for read, revenue. So an entry to close the income statement account with a credit balance. That's going to be my revenue accounts. Number 2 is going to be E, my expenses. So it's an entry to close my income statement accounts with a debit balance. The third one is going to be an I for my income summary account. So I'm going to close whatever the balance is in income summary. And my 4th closing entry is going to be D, close our drawing account. So my acronym to remember closing entries is READ. Revenue, expense, income summary, and drawing. So REID. Spelled a little bit different from what we normally do, but if you remember that acronym, it'll help you with your closing entries. So let's go ahead and take a look at what we're going to do in our work together. So here's our work together. Going through and reading my directions right here, it says the completed worksheet of the chart of accounts for Fix It Now for the month ended April 30th, the current year is given in the question assets. Here's my question assets. I moved them off to the side. On page 8 of the journal, journalize the closing entries. So you can see we're on page 8. Here's my worksheet. Our adjusting entries have already been done. Closing entries do not have a source document, so we always start with the word closing entry on the top. That says anything below here we don't have to worry about doing. Now, the date of our closing entries is always going to be the last day of the fiscal period. So when I look here, my worksheet, it says for month ended April 30th. So all adjusting and closing entries are going to be on that date. So let's go ahead and get that date on there. We're going to go ahead and do the 30th. I don't need to go ahead and write April because it's already included on there. So now we have to do our closing entries. Remember my acronym of READ, revenue. So I'm going to close my revenue account. My revenue account is sales. So sales has a credit balance, so I'm going to debit sales $2,160. What am I going to close it into? Income summary. That's my first acronym. R, close my revenue. My second closing entry is going to be my E, which stands for my expenses. I'm going to put the date on there. I have to close all my expenses. Now notice, right here are my expenses. Expenses have a debit normal balance. I have to get them to 0. But over here in my journal, I have to put my debit first. I'm going to close everything into income summary. So I'm going to list income summary here, but I don't know the amount yet. So what I'm going to do right here is I'm going to list all of my expenses. So I'm going to do advertising expense. And I'm going to credit it plus 60. And I'm going to do cash short and over. For $6. Insurance expense for $125. Miscellaneous for $189. Supplies expense $153. Utilities for $550. So I have 6 expenses. So what I need to do right now is take my calculator and add them up. I'm going to have 460 plus 6 plus 125 plus 189 plus 153 plus 550. Again, adding up all of those. And then I need to go ahead and put my amount, $1,483, in here as my debit. So I have my expenses now journalized for closing entries. Revenue first, expenses second. My third one I'm going to do here is going to be my I for my closing entries, which again is income summary. I get that by looking right here at my worksheet. Notice how it says net income. So net income means the business was profitable. The value of owner's equity is going to go up. Owner's equity has a credit normal balance. So I need to therefore debit income summary $677, and I am going to credit Connor Whitney Capital $677. So my I for closing always means I'm closing what is my balance of income summary. My balance of income summary is going to be my net income, so I'm just grabbing that number right here. My last closing entry is going to be to close my drawing, the D. So I look here, drawing has a debit balance of $1,700. So I need to get drawing to 0. So if it has a debit balance, I'm going to need to credit it $1,700, and I'm going to close that into its controlling account, which is Connor Whitney Capital, and that is going to be debited $1,700. Those are my 4 closing entries. The R, closing revenue, E, closing expenses, I, closing income summary, and D, closing drawing. Remember, when you think of that acronym of READ, The whole goal is to get whatever it is, the R, the E, the I, or the D, to zero. You do that by debiting or crediting it so that balance then is to a zero. So we'll go ahead and take a look at step 2. Step 2 is to post. We've posted already. Posting is not anything that is new to us. All we need to do is we have to start at the top. I'm going to bring my screen a little bit. So I have my calculator on one part of my screen, and then my ledger here. So I'm going to start at the very top. What I need to do is I need to go and find my account sales. I'm going to go ahead and put in here the 30th, and I'm taking here sales as a debit of $2,160. It had a credit balance. It says in our directions to post the closing entries, the general ledger accounts do not show the details for the period. The balance shown in each account is after the balance of adjusting entries are posted. Okay, so we're going to go ahead and put in a 0 here. So we put a 0 in here in the credit balance, but we also need to put a 0 in here as a debit. So when the accounts get closed and it has a 0 balance, we need to make sure we put a 0 in the debit as well as the credit. I put 8 here because, as you recall, we are posting from page 8 of our journal. The last thing I do is I take my account number right here, 410, and that goes back up here next to my account that I posted from. Now I'm going to do the same thing right here for income summary. So I'm going to go ahead. This is the first time I'm recording anything in there, so I have to put April in there. The 30th. Nothing in the item column. 8 is my page number, and I am crediting income summary 2,160. Previously had a 0 balance, and now it has a credit balance of 2,160. Account number 330 goes back up here. Again, our income summary is a temporary account under owner's equity. Line 9 is if I can own an income summary again. Date is the 30th. Age is still 8, except that I am debiting it $1,483. So on my calculator here, I'm going to take 2,160 and I'm going to subtract 1,483, and this number should be familiar because this is our net income. So my new balance of income summary is $677, and it should be because it should equal what our net income or net loss is. Because we have a net income example, it's going to have a credit balance. So I'm going to go ahead and put 330 up here. Now I'm going to go through and close all of my sales accounts, or excuse me, my expense accounts. Date is the 30th. Post reference is 8. I am crediting advertising expense 460. 0 as a debit and as a credit. And then account number 410 goes back up here. Excuse me, 510. Cash sorting over is 30th. 8. Credit $6 to get a 0 balance. Account number 510 goes back up top. Continue to go down through all of my expense accounts. There's 30th. At 530, goes up here. My last expense right here is utilities expense. It is 30th. The reference is 8. I'm cutting it $550. Now it has a 0 balance because that's the point. That's why we're closing it, to get it to 0. 560 goes back up here. So I just posted the E of my V, the closing entries, the expenses. Now I'm going to post the I, which stands for income summary. So right here, I'm going to go back to income summary. And I always do these in order from top to bottom. Don't jump all the way through because you're going to get distracted and not know where you're at. So I post line 15, now I'm going to post line 16. Put the date of the 30th, post reference is 8, and I am going to debit it $677. Income summary has a credit balance of $677, so now it has a new balance of 0, which is perfect because income summary is a temporary or nominal account as well. Put account number 330 back up here. Now I'm going to go to Connor Whitten Capital. Date is the 30th, post reference is 8, and I'm going to credit it $677. Again, this was a net income. So I'm going to go over here to my handy dandy little calculator. My beginning balance was $7,443, and I'm going to add to it $677 for this fiscal period. So the new balance for Connor Whitten Capital is $8,120. Account number 310 goes right back up here. Now, I'm closing the last one, posting it, and that's going to be the drawing. So, right here, I'm staying in my capital account, post reference is the 8, but I'm going to be debiting at $1,700, which was the balance of my drawing account. So I'm going to take that $8,120, subtract $1,700, new balance of our owner's capital account at the end of the fiscal period is $6,420, which means at the start of the next fiscal period, that is going to be, its new starting balance. The last account that I need to get to 0 is going to be my drawing. Okay, drawing is a nominal account, temporary, meaning we're only going to keep track of how much we use in it for each fiscal year, and then we'll start back at a 0 balance because we want to know how much money the owner takes out of the business for one fiscal period, not for the whole length of time. Imagine if your business had been in operation for 40 years. You only want to know what's happening for this fiscal period, not for the last total 40 years. So that is going to be how we post. Now I posted rather quickly because posting is not new. The biggest thing you need to remember is how you post. Start at the top and you work your way down. Don't jump all the way around. That way when you get interrupted or the bell rings and you move on to a different subject, you'll know exactly where you left off. So always remember to follow the correct procedures for posting. I'm going to click on grade that final step. Woo-hoo, I got all of that done well. So that's going to be how we go through and we record our, journalize and post our closing